Welcome to Small Practice Report information session number 47. In this Law Society of Ireland recording, Pat McClusker talks to Justin Purcell about maximising practice profitability.
You're all very welcome to those who have joined us here today on our small practice information session 47. So I'm here with Pat McClusker from Software Solace, and today we're going to be discussing maximising practice profitability. So Pat, you're very welcome. Just to introduce Pat, Pat worked with Bank of Ireland for over 32 years, and for the last 10 years he was the manager of the Donegal Town branch. He's a qualified financial advisor, and you hold a QFA accreditation from the Institute of Bankers. In 2000, you set up a computerized bookkeeping system to provide bookkeeping service to solicitors, and you had 20 practices throughout Ireland. And in 2010, you developed your own account software and solutions, and it's in use by about over 30 practices in Ireland. So Pat, you're very welcome.
Okay, Justin, thank you very much.
So would you like to share your screen if you need to?
Yeah.
And we'll take questions from anyone on the chat. Now we'll open it up at the end as well for questions as well, but over to you, Pat.
Okay, thank you very much, Justin, for the introduction. I just get into my slides here now at the moment.
Yeah, very good.
Okay. Everybody's very welcome to the presentation. Justin has already covered what the presentation is about, and also who I am. So I just ignore the first two slides and I'll move on to the presentation itself. So the main thing in relation to the presentation is to look at practice management and profitability of practices. And of course, profitability of practice is very important so that practice can survive, and also important from the perspective that it provides the income for the main fee earners within the practice. But another thing that people need to be conscious of as well, apart from the profitability, is the taxation that you have to pay out of that profitability, and also the thing that's very important in any business, which is cash flow. So I'm going to deal for a few minutes just I'm going to deal with solicitors, the client's accounts, just to show you how your client account can affect your cash flow. Cash flow will be described within accountancy as the lifeblood of any business. So if you cut off the blood supply in anything, then we don't have life any longer. Okay. So the main thing is we'll just look at the account for the next couple of minutes. The client account for the next couple of minutes. So the main thing, first of all, is to keep your client account postings up to date and to regularly reconcile to ensure the accuracy of what it is you've input into your system. So that whenever you look at a client ledger card, before you do a withdrawal, you can very clearly see what the situation is in relation to that account. Also keep your office accounts up to date and reconciled to ensure that outlays are not missed. And regular bank reconciliations to confirm the accuracy of the information that's posted to your system. Regular reconciliation are the only way to ensure an accurate system. So once your bank accounts are reconciled, you can produce all the reports that are needed for the Law Society inspections or for your accountant's report and your own office management requirements quickly, which I'll deal with shortly. And regular reconciliation also allows for early identification of any errors. And if they're identified, they need to be rectified quickly. So, you know, trivial breaches are only minor clerical errors and don't really cause an issue, as long as it's not something that's happening on a very regular basis, when you would then need to look at your systems to find out why they are happening. So an up-to-date and accurate account system means reconciliation can be completed within 2 months of your financial year end, as required by the Law Society. An accurate, balanced and thorough accounting reports allow for your accountant's report to be completed within the requisite 6 months of your period end. So that's the importance of good bookkeeping. I'm going to run through a couple of compliance reports just to show the significance of these on your cash flow. So you should be taking, in my opinion, you should be taking at least half an hour per week with your bookkeeper to review a set list of reports to ensure that you're staying in compliance with the solicitor's accounts regulations. So some of these reports, some of these compliance reports can have a bearing on your cash flow, which I'll deal with in a second. And we'll look at these first, right? So I must stress that the usefulness of the reports is depending upon the standard of posting to the system. And posting should be kept up to date, and manual reconciliations should be run each month to verify the accuracy of the inputted data. And you'll notice that in the last two slides, I have mentioned the word reconciliation on a number of occasions. Reconciliation is the hub that any particular system, be it either manual or computerized, hangs around. So it's really important that reconciliation is done regularly, and also done accurately. With ourselves here, for example, we would actually look for 1 cent if it's missing. We classify that importance to it. The reports that you're actually going to be looking at here on the various slides are going to be reports from our own software, Solace. But these reports should also be available from any other software that you have. And if the reports are not available, then you need to be talking to your software provider to get them available. So you should be able to, first of all, get a report called your client report, which should show only overdrawn balances within your system. And this should be run on a regular basis. I would even recommend on a daily basis. It only takes seconds to run it. And if we look at this particular report in the slide at the moment, you'll see that there is one overdrawn client account to the tune of €1,000. When you identify that, then you must pay this money back out of your office account into the client account. And if you're paying €1,000 back out of your office account into your client account, then you're affecting the cash flow within your business. And as I said, cash flow is the lifeblood of the business. Another report that you should be pulling is your aged debtors report. And within this report, we can see it here on the bottom of the slide. We'll see that there are actually 2 accounts which are shown with minus balances, which would indicate to me that the bills of cost have not been posted, although the money has been taken across from client to office. So these are 2 reports that you should be getting at least once a week from your bookkeeper, or if you're doing the accounts yourself, that you run them yourself. And these reports should be checked for the likes of these issues. The next one that I would be looking at is the likes of your dormant balances, becoming a big issue at the present moment in relation to solicitors' law society audits. And a dormant balance is basically a report where you can ask your system to give you a list of any ledger cards that have not operated from a specific date. So if I say that I want to see all ledger cards from the 31st of August 2020 that have not operated as at today's date, the 26th of May 2021, then my system should be able to give it to me. If you don't have that report within your system, then you should be asking your software provider to provide the report for you. And you should be reviewing these dormant balances on a very regular basis. What you'll find is the more regular you do it, the more you become used to the accounts that are stuck within your system for various logical reasons. For example, old probates, there could be conveyancing that's gone on for some time. There might be balances lying there. And as long as you have a satisfactory explanation and it's noted on your file, then it doesn't create an issue whenever you have a law society audit, or indeed whenever your accountant does their report at the end of the financial year. And then finally, then within the client account, we also have a report which is your client ledger summary. And that report basically shows you a list of everything within your system. So you have a list of your disbursements that you have paid out on behalf of your clients out of your office account. You have items billed in your office account that have not been paid yet. You have a total of those 2 columns together. And then you have a list of your client balances. So it's a nice report to have. Not everybody has it, but you know, it's nice. It leaves things nice and simple. So we can actually see here, if we look at it, item number 4 down in the list shows that we have disbursements paid out of the office account to the tune of €15,097. And we have 137,000 sitting in client account. So we should be considering taking these monies across to assist with the cash flow of the business. Now we're going into the business of the practice itself, and what reports you need to be looking at, or issues that you need to be looking at in relation to your practice to ensure that, as I say, first of all, that your practice is profitable, and then secondly, that you have sufficient cash flow to meet the day-to-day needs of the particular business. So one of the reports is your aged creditors, which basically gives you a list of money that is owed to various suppliers. As a practice manager, you should be aware of what is owed by the office and how long it has been outstanding. because the longer it's outstanding, the more the likelihood is that you're going to be asked for payment, which then could affect your cash flow. So you might also query some balances. So if I look at a sample of the report coming off our own system, we can see the age creditors. It's broken down into your current amount due, 30 days, 60 days, and 90 days. When I look at this report, I see that I actually have a minus balance on one of the particular accounts. This would suggest to me that the purchase invoice has not been posted, so therefore you haven't accounted for VAT, which you can reclaim in relation to that purchase. Also, I'd be looking at the fact that the majority of the money in this case is owed for 90 days, so therefore there's a strong possibility that you could come under pressure to make this payment of nearly €900, which may affect the cash flow of the practice. So you need to be aware of this report and be aware of what monies are due, and also be aware of the accounts as to whether the information that's in there is correct or not. Next report that I'll be looking at is your VAT analysis. When your bookkeeper has completed all the postings for the VAT period and reconciled the bank, they should also balance the VAT return. And once it's reconciled, the VAT analysis can be used to complete your VAT submission to the revenue. If you make a fixed monthly payment to the revenue in relation to your VAT, then you should check to ensure that you're not underpaying or overpaying, because again, this can affect your cash flow. At the end of your financial year, you're going to have to pay whatever the underpayment is. That underpayment can't be more than 10% of your total liability for the year. So you need to ensure that you are consistently paying sufficient every month to meet what your overall liability is going to be, because revenue can come back at you. If the discrepancy is more than 10%, revenue can come back and they can actually charge you interest and penalties for the previous year. The report looks very similar to this. You have a list of all your purchases, and then you also have a list of all your sales or your bills of costs, and the amount of your liability is your sales less your VAT, and that is either a liability or indeed in some cases it could be a credit back to the practice as well. So it's very important, especially for those people that have withholding tax. It's very important that you keep all these returns up to date and file with the revenue, because if you don't, then the revenue will not pay out your withholding tax, which also can affect the cash flow of your business. From an each system then, you get one of the main reports, which is the trial balance. And from the trial balance, you then have two other reports which come. One is called the balance sheet and the other is called the income and expenditure or profit and loss. The trial balance itself is a list of all the debits and credits within your system. And the rule in bookkeeping or accountancy is that for every debit, you must have a credit. So when you look at a trial balance, the first thing you should ensure is that all the debits agree with all the credits. And there are systems out there where that is not the case. And if it's a case that it's not happening, then you should be getting onto your software provider to find out why and what they're going to do to correct it. So if we look at actually a trial balance itself, we can see a list of all the debits and all the credits. We'll look at the figures here at the bottom. We can see that both figures are actually balancing. On our trial balance, we actually keep the client's listing or the client's balances outside the trial balance. A lot of them keep it inside. It's 6 of one, half a dozen of the other. On our system as well, too, the actual coding system is numeric. Some people do it alpha. Again, it makes no difference. And then you have a description of the individual expense or income, telephone, postage, that type of thing. All right. So the main thing is to ensure that these figures at the bottom here actually balance. You then might look at your trial balance. You see a figure here for fee income of 9,194, and you might scratch your head and say, well, look at where has that figure actually come from? So within your system, then you should have a list of nominal accounts, and you should be able to go into that report. And oh, sorry, I skipped on here. Just 1 second. Yep, you go into the nominal details, and you can actually get a breakdown of what the 9,194.60 is made up of. So you can see the individual bills of cost that are in there. Okay. Next, we come to the income and expenditure, probably one of the most important reports within the practice itself, so that you can actually see how you're going on an ongoing basis. And if your accounts are kept up to date, properly reconciled, then this report should be available to you within your system at the click of a button, right? Some people prefer that this is kept away from bookkeepers, and your software should be able to provide that type of facility for you. But what you're actually looking at whenever you look at the income and expenditures, you're looking to see, first of all, are your fees covering expenses? Our income levels as expected for the number of fee earners within the practice. And we're saying a figure up between 150 and 200,000 at least per annum for every solicitor. And I will deal with a slide on that in a minute. So you will have a look at what expenses are high, which need to be looked at. And the level of your wages should be in line with fee income of around about maybe 20 to 30%, depending on the wages that you're paying out. You might have, for example, you could have somebody within your practice who's acting as a secretary, and that person might also be a fee earner, so they might be end up getting paid more money. So your income and expenditure is just basically giving you a list of what money have you coming in, and then the various different expenses that are actually coming out of it. So in this particular case, they all add up to 1,266 out of a fee income of 9,194. So you end up with a profit of 7,928, which is a very high ratio in this particular scenario. But the main things to do here is to check, first of all, to ensure that your fee income is at expected levels, and you should investigate any shortfalls, and you should check out anything unusual in relation to the expenses. We would also recommend that what you should be doing is the likes of budgeting, where you would then keep copies of these on a monthly basis, and that you would actually compare against your budget for the year. The reports within our system can all be exported out into Excel, so it leaves them nice and handy, so that you can actually look at them in Excel itself. You should then be looking at analysing your income and expenditure. So we are saying that every fee earner should be generating at least 175,000 per annum. And I'll deal with that figure in a second. Your staffing levels should be on average about 2 admin staff for every 3 fee earners. You should aim to keep your wages costs at around about 20 to 30% of income. Your non-wage related expenditure should be no more than 25 to 30%, which means that you should be coming in with a profit of around about 45 to 50%. So if you had a fee income of 180,000 and you have a 50% profit, then you're going to end up with around about 90,000 of a profit out of an income of 180,000. You have to remember then that you have to budget about 40% of that for tax, which is going to be about 36,000. So that leaves you with 56,000 for your own income if you're a sole practitioner. But more importantly, part of that 56,000 needs to be retained for the development of the business. If you are not retaining profits to develop your business further, the business is going to stagnate. And if the business stagnates, then there's no doubt in my mind that it will fail. One of the main things is to watch out for in relation to any practice would be the balance of your time and fees, because your overhead costs, such as wages and the other issues, the likes of your telephone, are things that you can do very little about unless you either do without staff and take on more work yourself, which is not what I would recommend. And the likes of your telephone and ESB, you might get it adjusted down by 5 or 10%, but that's about the height of it. So the main thing to watch out for in a solicitor's practice is the balancing of your time and fees. So if you consider that a working week for a principal is on average about 40 hours, if you take out an hour for lunch, you have 35 hours billable for the week. If you allow for bank holidays, an individual working would have around about 220 working days in the year. Whether you like it or lump it, there's going to be downtime, so we allow roughly about 25%. So this all adds up to a principal aiming at around about 1,155 billable hours per year. In a small to medium-sized practice, you'd be looking at a chargeable rate of around about 250 per hour. So if you multiply 1,155 by 250, you come in with an income of 288,000, excluding that, for each fee earner. We're given a further allowance to reduce those figures down to about 175,000, which we're saying is minimum. I have seen practices and worked with practices where fee earners could be earning 350,000 per annum, just depending on how efficient they are. So we understand also that you can't always bill out at the full rate, but you certainly should be trying to achieve 175,000 per annum, excluding that, for each fee earner. And I just look at that from a different perspective. So, you know, what you're actually doing is you're selling your time here. So the bad news is that time flies, but the good news is that you're the pilot. Okay. So if we look at the 175,000 of fee income in another way, we're taking the 175,000 at a charge of 250 euros per hour. That works out at 700 hours per annum that you're billing if you divide the 175 by 250. If we consider that there's 44 working weeks in the year out of 52, which allows you 6 weeks holidays and a further 2 weeks to cover bank holidays and time off, that 700 divided by 44 works out at about 16 hours per week, which is about 3 hours per day that you're billing out of your total 7 hours working. So what I'm saying here is I would strongly recommend that whether you're on a chargeable rate or whether you're on a time basis, that you should actually be tracking your own time daily, and you should be reviewing your billing time weekly or even daily as well. And there are plenty of little time systems out there online which you can actually use to record time, and I would suggest that you would be sitting back at least once every week, if not every day, to have a look at what you're spending your time on. Just briefly running through fee earners per employees. If you look at the Morgan McKinley report of 2017, the average salaries for experienced solicitors are about between 45 and 65,000 per year. So if we take a billing rate of around about 120 euros per hour, then they're coming in at around about 3 times salary. But if you get a figure of about 200 euros per hour for that fee earner, then we're coming in at a rate of about 3.5 times salary. Okay, your balance sheet, which I'll not spend a terrible lot of time on, is a snapshot at a given date of your assets less liabilities. The main thing is to look out for here is that within the balance sheet, you can see your current assets, you can see your current liabilities, and the net assets to liabilities should always be a plus if at all possible. If you're in a negative situation, then that business is in serious trouble. Then you end up then with the balance at the bottom of it. So if I want to come to a final slide, my final slide would be some financial tips for you as a summary of where it is, what it is you should be looking at. And because errors in client account have to be corrected from office funds, you should keep your records up to date, check ledgers before issuing withdrawals, regularly review your compliance reports. You should ensure that fees and client accounts are taken across within 3 months of falling due. You should estimate your outlays for each matter and where possible ensure your client lodges sufficient funds in advance to minimize the burden of outlays from the office account. And you should ensure that outlays for the likes of land direct, agency fees, etc., are all covered. All right. And as I say, I would also recommend that you should be looking at budgets for the year. Okay, thank you very much. That's my presentation, which has been brought to you by Pat McCosker. We have a couple of websites there if you want to have a look at them. There's some tips, there's videos and all that on the website itself. So it's something maybe you might want to have a look at a later stage. So yeah, I can take any questions now if you wish.
Yeah, that's great. Just in answer to that question there, yeah, we'll send out a recording and a copy of the slides if Pat, you're willing to share them with us on Friday afternoon.
Okay.
So, yeah.
Right.
So if anyone wants to ask us a question, we'll take it now at the chat. Otherwise, I'll just to get it started. Like Pat, that's a really, really great overall summary presentation in less than 20 minutes. So thanks for that.
Thank you.
So what do you think the top 3 or mistakes or areas people need to really focus on out of all of that? So there's a lot in there, you know, the different types of ledgers and accounts and summaries, etc. But what do you think the classic mistakes that people make?
I think the classic mistake is the charge per hour and the time that you spend on stuff, and the not recording of that time so that you can review it. You know, those are 3 tips that I would give to anybody and say to them, look, if you want your practice to progress out into the future, those are the things you need to concentrate on. You know, just making sure that everybody is constantly kept fairly busy.
Yeah. And just on that time recording too, I think even just an Excel spreadsheet where you just go through the discipline every morning or every evening before you wrap up, just to kind of note in what you've spent your time doing and what's available, because then you get into the habit of it and then you start to notice it and then actually it starts to change.
Yeah, I use a wee system called Clockify, CLOCKIFY, and then I also use a spreadsheet then, so I record the stuff on a daily basis from Clockify into a spreadsheet, and then I look at my spreadsheet at the end of the week, And every week without fail, I'm amazed at where I've missed stuff.
Yeah, it's a little bit like keeping a household budget. You know, if you're
Very
not
much so.
watching your expenses, it can drift away. So, quick question there. Any recommendations for bookkeepers that work with Leap? They must be a competitor. My bookkeeper is about to retire. Well,
Oh, they're looking for somebody that works with Leap.
Yeah.
Right. Okay. Yeah. I don't particularly want to comment on the product.
Yeah.
I don't have any recommendations for Leap. I don't know where you would go to get it, apart from back maybe to Leap themselves to see if they have somebody, but certainly I don't know anybody working with Leap.
Okay, so well done, Pat. Where do you put the work in progress?
Where do you put your work in progress?
Yeah,
it's a funny sort of thing, and some accountants look for it, and other accountants don't. My own kind of theory on it is the fact that work in progress, as far as I'm concerned, is really something that is plucked out of the air, and it's not really a real figure. So I don't particularly put it into what I would classify as the ongoing bookkeeping of the practice. If your accountant wants to include a figure, well and good, but to me, it is never something that's either achievable or reflective of exactly what's going on. It's just an estimate.
So they've clarified the question a little bit, sort of no foul, no fee type cases. So where work is done, but the cases is on a win-lose basis.
All right, okay.
And there's another question, just I might as well. If we time costed conveyancing, very few would make a profit on it. So how do you handle these jobs that take longer? So two questions there. Yeah.
In relation to time costs and conveyancing and not making money on it, my advice to that individual is this: don't be a busy fool. All right. And if you're not charging the proper fee, then that's exactly what you are. And there's no doubt whatsoever in my mind. I come across this on a regular basis. The solicitor next door or down the street is doing it for €1,000. You decide to do it for 900, and they walk down to another street and somebody else does it for 800. You're better costing your time. If you can't make money at the time that you're charging, if you can't get the work at the time that you're charging, then in my opinion, you shouldn't be doing the work at all. If others want to go out and undercut it, those people will not last, right? In relation to the other question on the
no foul, no fee.
Yeah, again, I see that as very risky business. Like, why would you go out and spend maybe a full week looking at something in the hope that you're going to get paid for it at the end of the day? I wouldn't be taking it on unless I was very sure that I was definitely going to win, and that's not easy in a legal situation.
Okay, and how do you see technology affecting all of this going forward? Like, if you were giving advice to sole practitioners out there, like, do they need a case management system, or can they operate off just a manual system? Like, what's your advice?
As far as I'm concerned, any practice should have three pieces of software. Number one, a very good account system. Number two, a very good case management system. And number three, a very good payroll system. Would I have them all amalgamated together, or the case management and accounts amalgamated together? My answer to that is no, because what's happening on the market is you have some very good case management out there that have very bad accounts, and vice versa. So what I would do, because it's Windows-based systems, I would have a very good accounts, which may not necessarily be the same as my case management. Technology is vital. Up-to-date technology is extremely important. Don't be running Windows XP or Windows 7. They're not supported any longer. A desktop computer at the moment, you'll buy it for €500 plus VAT. Have the top of the range equipment in your office.
Very good. So two last things, Pat, and thank you very much. The feedback is what a great presentation it's been. One thing you brought up during the presentation was retained profits, or retaining money within the business. So I think you really hit on something there, that how important it is that when you reinvest back into the business. Do you want to just explain that just very briefly for us?
Yeah, like you take, for example, we'll take a figure of 200,000. If you have a fee income of 200,000 for the year, and you have 50% profit, so you have 100,000 within that practice of profit for the year. If you're paying 40,000 of that in tax, then you have 60,000 left. Okay, so if you're spending that 60,000, in about 2 or 3 years down the road, whenever you decide that you need to buy a case management system, or you need to do a bit of review of your account system, you don't have the money then within your practice to be able to go off and research that. So I would say that if you were in a scenario of 60,000 profit out of your total income of 200,000, I would be retaining at least 5 to 10,000 of that every year to build my practice up.
Thank you very much, Pat. And I suppose Virginia there says, I found that low-cost fees lead to rubbish clients with no value on your work. It's not worth it.
I couldn't agree with any statement more. You need to assess what a good client is to you. And in my opinion, a good client is somebody who pays me on time for my services. All the rest of them, let those that are undercutting take them. They're welcome to them.
Listen, Pat, you've been a great sport today. You really helped us with really no-nonsense advice, practical advice. We really appreciate it. Our future sessions there next week, we've got the benefits of document assembly, limited liability partnerships the week after with the LSRA, and the revenue are coming in to discuss this new e-withholding tax procedure on the 23rd of June, and then update on remote court hearings on the 30th of June. So we'll send out the slides and the recording later in the week. Thanks very much for your time, Pat. I'm sorry it's so short. We'd love to talk to you again. And thanks everyone for coming along. Hopefully we'll see you again next week.